I guess now would be the time to talk about Barrambie and understand how you're piecing this together. Because, again, I've had a couple of conversations with Jeremy and Chris, and I like the project developer model. And you guys are sitting on a lot of cash, you've got a lot of optionality, but the model of getting an asset to a point where you bring in strategic partners with cash and capital interests me. Is that what you're doing at Barrambie?
Yes. Well, what we're doing at Barrambie is we've got an ore body that is a little atypical in Australia. And so what we're having to demonstrate to the market is that this ore body is valuable because you can recover saleable products from it, and you can develop a market for these products. Now, what we've looked at is a couple of different development pathways, and we've piloted these pathways here in Australia and in China to determine which is the best way forward. Now, what we're able to do, we're able to go down a pyrometallurgical route where you mine the ore and maybe you roast the ore, you perform a reduction roast to produce a certain quality of mineral that then you can sell. What we've also looked at is a hydrometallurgical route, which enables us to recover not just the titanium, but the vanadium as well. The pyrometallurgical route can do that as well, and there's different ways you can go with these materials. But what we've wanted to do is demonstrate to the market that, yes, our ore body is a little unusual in Australia, but in actual fact, here's the pathway to development. Here's how you can do it. And now we're talking to partners about developing this ore body, and we're still in the process now of putting together a demonstration plant up in China for the purpose of proving not just the technical viability, but the commercial viability of these processing routes.
Let's bring this back for people who haven't read up as much as I have on this. So you've got an ore body in Western Australia, this titanium ore body called Barrambie. How much have you spent on it to date? What have you done, and what do you know about what you've got today?
I think all up we've spent about $30 million on the project, on exploration and feasibility studies and metallurgical development work.
Over what period?
Oh, this is over probably a decade or two. I joined the company a couple of years ago, and I know there's a history of project evaluation. And with the acquisition of the project, the drilling that we've done, the metallurgical assessment work that we've done, we've probably spent about $30 million. We've drilled extensively, and that's where there's a large component of the cost. We've drilled 55,000 metres of drill hole on that project, so it's very well defined now. It's actually a very big deposit, and it's open at depth. So we think there's a very large resource there.
Have you got an idea of the scale of that project, of the grades? I mean, what do you know? With 55,000 metres, that's a lot of data.
Yeah, the ore body that we've identified is about 11 kilometres in length. We believe it's about 4 kilometres deep. It's large, and what we've identified is a global resource of about 280 million tonnes. Now, there are high-grade areas to this global resource that I think that we would look to develop in the first instance. In what we call the eastern zone, there's about 55 million tonnes of high-grade titanium mineralisation, and that's around 21% TiO2. There's also some vanadium in it. Wow. In what we call the central bands, there's another 65 million tonnes, which grades about 16% TiO2. Now, if you were to compare those grades with your average heavy mineral sand operation, their heavy mineral content may be of the order of 2 to 3% in situ. We're talking about significantly higher levels, almost an order of magnitude higher. So you've got that mineralisation. You've got some additional cost because it's hard rock, there's mining involved, there's blasting and so on, and there's crushing and milling. And then you need to get to the port. I was mentioning before, a lot of the heavy mineral sand projects are on the coast, so they're often quite close to ports. We've got a little bit of a trek into the port of Geraldton, which is one of the main mineral sand exporting ports in Western Australia. But our high grade supports this hard rock operation to produce concentrates that we'd ship to China for further processing and value recovery. So that gives you an idea of the scale of the operation. And the vanadium resource we've already identified. We updated a definitive feasibility study last year, and we looked at making ferrovanadium from this deposit, mining exclusively the central zone. We didn't consider the eastern zone, or at least not until the very end of the operational life. And we determined that yes, you could put a standalone ferrovanadium operation on this deposit, but it was a relatively high cost operation compared to some of the low cost producers out there. So what we've decided is that in order to really extract the full value from this resource, we need to be recovering titanium as well. And so that's why we've gone down this pathway of looking at the eastern zone, particularly identifying processing options for the eastern zone that will give us a whole of ore body solution for recovering value.
Right, so you've got titanium, you've got vanadium, and say it's moot point whether vanadium could stand on its own, especially in today's market, but have you found a way of being able to extract both those and any other byproducts in one solution? That's got to be a big driver for you in terms of understanding the economics, hasn't it?
Yeah, we have two solutions. We have a pyrometallurgical solution and we have a hydrometallurgical solution. But
which one are you going to end up with? I mean, what does the DFS tell you? Or are you still working on it, or do you need partners to come in and discuss this?
We do need partners to develop the project. It's a very large project, and it's not one that our company could develop independently.
But not technically.
So
are you saying to any partners coming in, look, we understand what we need to do here, but do you want to come in as a funder and an off-taker, or however you structure that? And I assume it's going to be Chinese from what you're saying and your past track record. So, have those conversations started?
What we've done is we've basically identified a couple of production pathways, and we've gone to the market and said, this is what we're capable of with this deposit. We've received a fair bit of interest from China in particular, and we've actually worked with our partner up there, one of the metallurgical institutes known as IMUMR, who is looking to work with us to develop a robust metallurgical process for extracting the valuable components of the ore. Now, they, under our recent agreement, are planning to put a demonstration plant in China to prove the processes that we've identified as being the best way to go forward. So we're still in developmental phase, but the objective here is to end up with a joint venture where we have a shareholding, they have a shareholding, and we mine and concentrate in Australia. We ship the product to China, and it's further processed in China, and we both share in the value there.